enemies. So in some ways, Europe is trying to go with enemy. It will be actually a big mistake if they do that.
And amid that, you might argue, there's, while those two squabble and while they fall out and while they have their war of words, there are opportunities. And I wonder where India fits into this picture. What will India look like in this new world order?
No, India has always not been a large beneficiary of multilateral trade world. In fact, the WTO is largely about goods. What India has worked on is the services part, which is not part of the WTO framework in some ways. And that's where India was never a large beneficiary of multilateral world. And so when it's going away, India will have to find its own ways. At the same time, the technology part, which is coming up, which is going to be the world's future, is not easy to tax. Most of the wealth is going to be basically what I call non-material or dematerialized. And most of the wealth is going to be of experience, which is not easy to tariff. And that's going to be very interesting over the next 30, 40 years. 80% of the wealth is going to be non-material. What we are currently tariffing is actually the material world. So there is going to be a sort of a direct shift, and India is a beneficiary because most of the world's experiential stuff, whether from banking to pricing of derivatives to even virtual realities or artificial intelligence, everything, whether it is by American companies or Korean companies or European companies, are actually being made in India by their global capacity centers. Almost today also you announced several global capacity centers, but more than 2,500 global capacity centers are existing in India from the largest companies, and sometimes they have more employees in India working than their parent country. And why? Is because India is giving you that talent which is able to visualize the future and create that wealth, of course, for that country which owns the GCC, but also for India going forward.
I want to talk about capital markets because quite clearly your area of expertise as well, isn't it? Talk to me as well about, what that turbulence means for capital markets here, because, we talk about investor confidence. The Chief Minister just saying there, investors still believe in India, investors are bullish. Do you share that optimism?
Absolutely. In fact, if you've seen last couple of weeks where things have really gone topsy-turvy in the world markets, markets have fallen even in US by 12, 15%, and now they're running at almost a recession sort of framework, which is 20% down. India has done remarkably well. Yesterday also when Hong Kong went down by 13%, India was down 3.5%.
Why?
It's because India has its own growth momentum. Even this year, that is the financial year started April 1, we are going to grow at somewhere between 6.5%, 7%. It's going to be the fastest growing large economy in the world. And large portion of India's growth is from within. And that's where there are a lot of bridges and ports and airports and roads and everything is getting constructed. That's the infrastructure push by the government. But also many more industries are being set up. In fact, in the new world order that is taking shape, India is going to play a very significant role going forward. And that's where, again, many more people will come. The other part is also interesting that most of wealth, if it is going to be exponential, it doesn't require a lot of capital to be invested. It requires some amount of capital, but a lot of brains, a lot of exposure, and a lot larger markets, right? And Indians are now coming faster to the listing space, listed space compared to the rest of the world. In the rest of the world, there is a tendency now, especially US and Europe, where large companies actually go private to the private equity, private capital. Whereas in India, large companies go to markets, and some of the largest companies in the world, like Hyundai Motors, last year in November 24, listed its subsidiary in India, $3.3 billion they took away. And this year, LG is going to list, but probably Walmart's subsidiary will list. And similarly, many other foreign companies, which are the largest in their countries, are going to list their subsidiaries in India. So you can see they know that Indian market is going to give them better returns. It's actually a larger market and very growth-oriented.
It's not without risk, though. There have been some amazing success stories of listings. There have been some flops, to say the least. How do you sort of even out the highs and the lows there? And I wonder what is the rationale, what is the reasoning for that? Why do some fly when they list here?
It's basically, it's a free market. So the companies come out, their merchant bankers or investment bankers tell them that this is the price at which you can sell. exchanges or the regulators don't have a say at what price they want to sell it at. They can only prescribe the disclosures that the companies need to make. And some of the companies may not have estimated, or their investment bankers may not have estimated the future well. And that's why after listing, they may not do so well. But many companies actually are aware that they need to put some money on table before the list. And that's where after listing, their performance is better. So in a way, exchange doesn't have a view on prices going up or going down. Our way is to give you a framework to disclose all the requirements, and it's up to the investors to whether they want to invest in your company when you do IPO or not. And that's how we look at India. Is in a way a market where many companies come, most of them are successful, unlike say in last 7-8 years, 400 Chinese companies came to American markets and took away $400 billion of investors' money. Many of them did not even have addresses, let alone a business model or a factory. But they took away $400 billion and nobody cared there. Whereas in India, we tend to be very, very sensitive to smallest sort of infractions by our companies.
And neatly, that gets me onto a final thought because our time is up. But regulation, just a word on, where are we on regulation here? At the right level, would you like to see a relaxation in the regulation to allow some of those, not maybe to the extent of what we've seen in the US, but that would free up a lot of capital, wouldn't it?
No, broadly speaking, Indian capitalism is what I call promoter-driven capitalism, vis-a-vis American capitalism or Anglo-Saxon capitalism, which is what I call manager-driven capitalism, that the owners have at least receded slightly, although they might be sort of appointing the CEOs and give them a lot of money. But broadly speaking, Indian capitalism is owned, it's owner-driven capitalism where their prestige is at stake. And that's where India is, in a way, more technocentric framework where Mark Zuckerberg still is a face of Facebook, and Elon Musk is still Facebook, Tesla. That's what I call owner-driven or owner-manager-driven capitalism. India is pretty much that style, and that's where I have a lot of hope that future is about people who come in front rather than run from the background. And Indian regulations are actually some of the toughest. Like America has what we call golden share, which means some people have more rights than others. Similarly, they have non-pari passu shares, which is again some shares have more rights than others. India, pretty much today, all shares have equal rights on the companies. Even disclosure standards are much harder, much tougher than what US, Europe has. And even if a company's management has a stake or an interest in a particular resolution, they cannot even vote on that resolution. That's where what we call majority of minority. So we have evolved to ensure that the conflict of interest or asymmetry of power and asymmetry of information vis-a-vis promoter manager and the minority shareholders, we have tried to resolve, and that's where more people are trusting Indian capital markets. Today, I have 210 million accounts which we service across India and 110 million unique investors. If I were a country as NSE, I would be around 14th largest country in the world, given my number of investors. India has 20% households, which now save through stock markets, larger than France, Germany, and many European countries. Why I'm telling you this is, India has now grown to trust its entrepreneurs, and it has got that confidence that future will be much better. And entrepreneurship is what gets you more jobs, and of course, that gets you more prosperity.
Yeah, we're going to pick up on that in our next session, actually. So there's a really good grounding there, a really good basis for us to discuss. And the question about Elon Musk being so involved, so publicly involved in Tesla is for another discussion, isn't it? Really good to have you here. Thank you for your time this morning. Ladies and gents, please welcome Ashish Chauhan. Thank you so much.
Thank you.
Good to see you. Thank you. Thank you. Nice to see you, please. So just while we reset the stage, a little word from some of our sponsors. He says, hopefully.
25 years ago, Edelweiss started with a vision of not doing things the same old way. Over the years, we have explored all things investment, and have become better at it every year. We started off with investment banking and soon made our way to institutional equities and wealth management. Now, with strong institutional ownership of BAG as a promoter, we have grown to become a comprehensive wealth and asset management platform, also offering capital market solutions. And our fresh new perspective on wealth is reflected in our new brand identity. Nuvama is a unique brand name that brings together new perspective and prosperity, something we have always strived for. Today, we are one of the top wealth management companies in India and the company with a comprehensive wealth management platform, employing over 2,700 plus people across 450 plus locations, with a network of more than 23,000 plus partners. With significant client assets, Nuvama is the established player with proven execution across HNI and UHNI client segments. Nuvama also has 1 million customers, comprising people, businesses, and institutions, including ultra-high net worth families. While all these numbers are very gratifying, at Nuvama, nothing gives us more pride than the relationships we build with our clients and how we obsess over even the smallest of their needs. We believe in only doing what is best for them and their money, and we can back it up with our expertise, experience, and innovative solutions. The next step in our evolution will be driven by technology that will help us understand and use investment trends. At Nuvama, we believe in creating a culture that nurtures growth and learning, something that promotes leadership and an entrepreneurial spirit in everyone. We inculcate values of commitment to the client, clarity, reliability, and a desire to disrupt the status quo. Everything we have achieved so far, our vision and our values, are all driven by one mantra: to do it right for our customers. Nuvama, let's do it right. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Welcome to the IGF Executive Circle, an exclusive global platform for ambitious leaders who value meaningful connections, real-time insights, and cross-border opportunities. Be a part of the next wave of leaders, innovators, and business pioneers leveraging India's global rise. An IGF Executive Circle membership brings with it AI-powered smart networking, exclusive masterclasses and industry insights, access to in-depth market reports and curated content, priority access to IGF events, and numerous other benefits and opportunities. Ready to lead the future? Join the IGF Executive Circle today.
Huge thanks to our sponsors that allow all of this to happen. So I want to move quickly on to our next session. And this is an opportunity for you to get involved as well. I want to take some of your questions here because we're going to talk about what that new world order looks like. Because for India to be the second largest economy by 2050, it needs work, the structural reforms, digital transformation, a shift as we've seen in global trade and investment. So I want to bring together some leading experts in that field to talk about exactly that. So please let me welcome to the stage Sanjay Nair, who's the founder and chairman of Sorin Investments, Vineet Rai, who's the founder and vice chairman of Avishkar Group, Manish Jain, chief strategy officer, director of capital markets and Mirae Asset Capital Markets, and also Amit Ramchandrani, who's the chief executive of head of investment banking at Motilal Oswal Investment Advisors, and lastly Dilip Kadambi, who's the group chief financial officer at IHH Healthcare. Please take a seat, gentlemen. Come on. I'm going to stay here because I'm going to wander around and take some of your questions in a minute. But gentlemen, please make your way up here and we will begin. Apologies, we are running a little late. There's been a lot for us to fit in. Please. I'm going to stay here.
They're having tea and coffee. You call them in.
Good. Yeah, there's people having tea and coffee. They can come back through. We're very relaxed here. Gentlemen, good afternoon to you all. It is just past midday. Thank you for being here. There's so much for us to talk about. And I should just say, I want your questions from the room. So if you have a question, stick your hand up and I will come and find you with a microphone. I've got plenty, but I feel like we've done all the work this morning. So I'm going to hand it over to you because there's so much for us to talk about. But let me kick it off first of all. And I want to take an initial response from each of you on this, if I can. We've talked a lot about what the last few days have delivered, what those tariffs mean, what they mean for global economic uncertainty. I wonder how investors, with an eye on India, can adapt to this new world order. Sanjay, maybe let me start with you. How can investors adapt to this new world order?
I think a lot depends. Is it on?
Yeah, there we go.
I think it depends what kind of investor you're referring to. I'm not going to talk about stock market investors, but in terms of foreign direct investors, a huge opportunity what this whole thing represents. But I think first, Ben, we should just focus on what it means for India.
I don't think your microphone's
Is it
good.
coming
I'm going to give you
out?
this. Excuse me.
I think first and foremost, you've got to think about what it means for India, what's going on. And I think at least my narrative is a little different than what I've been hearing for last 72 hours. I think India is going to be impacted, moderately though. 18% of our exports, merchandise exports, are to the US, and there is no way that we are going to escape unscathed. I think a lot will depend on how the private sector adapts to the change that's coming. A lot will depend how government can speed up the structural reforms. They've done a lot already, but there are a few things that are pending, need to be really put on the drawing board and executed, whether it's judicial, contract, labor. Both sides have done a lot already. Okay, let's face it. Our Indian companies have built scale. They have a certain degree of product differentiation. They've done a good job on exports. Government has done a lot on investing in digital, physical, and social infrastructure. But I think that the time for kind of hiding behind tariffs is over. Okay, and I think the private sector will have to just reset entirely their supply chains, diversify their markets, build bigger and more efficient businesses, be more comply with sustainability norms if they want to get into exports and diversify the export base. So having said that, I think that's where the opportunity is there for investors. Yeah. Foreign investors coming into India will come when these things fall in place and it's easy to set up capacity. You have the skilled labor for the right areas. I don't want to use the word ease of doing business. I think we have come a long way. But more than that, India should present for the foreign investor a real place to come up and put up a manufacturing business to be able to plug itself into the supply chain. So that's been talked about a lot, but the reality will happen when the Indian businesses and the Indian public sector really